Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. This is your weekly video for Sunday, November 13th. Okay, well, last week was a pretty interesting week. Personally, I was having a great week up until Thursday morning, but then my bias got the best of me, and I overlooked a few obvious in hindsight data points that indicated the potential for a move up on Thursday. So I was mispositioned for that. So let's see what we can take away from last week. And I'm going to do sort of an analysis on my week and share those learnings with you. Maybe you'll find that helpful, and maybe that will also improve your trading as well. Okay, so going into last week, we were looking at the forecasts, and the first thing I'll point out here, if we switch over to Keynote, this is a screen capture from last week's video, and you can tell I was really focused on this cluster of red here around November 17th, but I ignored the declining down pressure coming up into last week, right? Like November 10th, 11th, around there. So that was definitely an example of my bias being attracted to what I wanted to see, which was more down pressure, and ignoring the potential for a move up into late last week. So that is a really important takeaway, just to mentally stay open-minded to options and paths of price that contradict your analysis and bias. So let's go over to TradingView, and we can take a look at another example of how price moved and how the price movement on Thursday could have been anticipated. So we're looking at Apple on the daily. So let's go back to TradingView and take a look here at Apple and see what we can learn from this, and see if there was any clues on Wednesday about the potential for a move up on Thursday last week. So what we're showing here is there's lots of information. I'll walk you through this. We've got two EMAs. The first one is the 103 and the second is the 144. So combined, these two EMAs are the square of 12. These are the two red lines here, the thinner one being the faster, the 103. Okay, so we've got that. We've got the time trade script as usual. We've got something called BBHMA, and that stands for Bollinger Band over a Hull moving average. So the yellow line is a Hull moving average, and then we wrap a Bollinger Band around that, and that's the red and green. And then down here, we've got the %B, which is where in that Bollinger Band is price. And then we've got the Bollinger Band width, which is important information because at the end of a move, a Bollinger Band tends to expand. The width of the band tends to expand, and at the start of a move, the band tends to get narrow. So that is important information. And then CMF stands for Chaikin money flow. Mark Chaikin created this indicator, and it includes both volume and where on the bar did price close. Okay, so it's kind of like a smarter on balance volume, if you're familiar with that. So anyways, if we take a look at Apple here, what do we see? We're on a daily, and one of the things that I appreciate about the CMF, or Chaikin money flow, is the fact that it turns early. It's very good at giving divergences, identifying divergences. And on the daily, we can see it's making kind of like higher highs here as price goes up, kind of confirming that. And then it came down, and price for Apple dropped down to about 138. But look at where the CMF is. CMF is at minus 0.06. It's actually right at the prior low and above the low in September. So CMF is actually making higher lows here. And then if we drop down to a 30-minute, we can really see that clearly. So on the 30-minute, we can see price just sort of steadily grinding down here on Wednesday. But where did it stop? It stopped again at a higher low than the prior low on the last week on Friday. Okay, so what that indicates is there's a bit of a divergence here, and we can also see a higher high over here as well, right? On Tuesday, we made a higher high in CMF, indicating that there's more volume on the up bars than there is on the down bars. So that kind of divergence is a real important clue, and something that honestly I wasn't looking for. And that was a huge clue of this impending move up on Thursday. Okay, so that's one of the big takeaways from last week. Now let's see what we can, how we can apply that to the coming week going forward. So where are we right now? Let's take a look at the Qs. All right, so we're going to flip over to the Qs here, and we can see that, well, back in late October, I was talking about some sort of retracement that would sort of correct this entire structure back from August, right? And we're starting to see that now. So if we were to put a fib retracement here, we're all the way back to the 382. Well, what do we have ahead of us? Okay, so price is way above the upper Bollinger Band right now, which is typically a sell signal. It's in the sell zone. We've also have the square of 12, the two EMAs right above. And we also have the 50% retrace of the entire move down from August 16th. So these are significant resistance levels. And it's going to be difficult for price to keep moving up past these. It probably isn't going to make it past on the first try if it does at all. Okay, the overall environment remains bearish. There's liquidity being drained from the system. Doesn't matter really how good the economy is. With the liquidity being drained, that is going to make it very, very difficult for any sort of meaningful rally in the markets. All right, so let's go and build a path for next week. In order to do that, I always like to take a look at time trades and take a look at what the forecast is shaping up. So let's flip over to the time trades daily forecast, and we can see here that we have in Apple, we've got a pivot high November 11th. So if we go back to what we saw last week, last week's actually played out pretty well, to be honest. So here's the screen capture from last week, and it's got that pivot high there right up in that notch in the down pressure. Now I looked past that notch here and ignored the potential for a move up, but sure enough, we got it. We got the big move up. And also, it's lining up more or less with the yellow Gann wave. This is a lunar cycle, and usually it kind of takes a bit of a pause right around eclipse season because the moon movement changes slightly. But what we see here is a potential for a pivot high reached yesterday coming into a Gann wave yellow. Now, Gann wave yellow is the peak of the lunar cycle, and traditionally that lines up with tops. Blue traditionally lines up with bottoms, but as you can see, they invert, right? So here we had a Gann wave yellow, which was one day from a top, and then it came down to a blue, which is kind of the traditional behavior. But then we had a Gann wave yellow after that ended up being about the same price. And now then it inverted. Now we're up to a Gann wave blue, but I think we're going to return to traditional behavior here where Gann wave yellow marks a top, and you can see the increasing probabilities of a move down. And we've got Gann wave blue coming up November 28th. So that's just Apple. What do we see in the other indexes and major stocks? So let's take a look at the Qs. Now the Qs really, the forecast has changed quite a bit here, as it can. Remember, these forecasts are updated every night with the latest data. And one of the things that we notice here is the forecast pivot moves down, or sorry, the forecast for down pressure has really disappeared, but we still have this pivot low here around November 18th, okay? So it looks like it might be there's potential for a minor correction here. I'm not seeing a lot of potential for a major move down. So that's something to keep in mind. It looks like the major move down potential really starts later in December. Let's see if that aligns with spiders and the Dow. So spiders has decreasing potential for a move down here, and also a pivot high on November 17th, relatively low probability. So I wouldn't say this is, kind of confirming or aligning very well with the Qs at the moment, and that's okay. Let's take a look at diamonds. All right, so diamonds is showing, well, we got a move down with a decrease in down pressure here. And now we're seeing a move up, a potential for a move up into November 28th. So the Dow has been kind of the strongest of all the major indexes here. However, it does have a bit of a pivot high up here. And the up pressure is actually pretty low for a few days. So I'm thinking we might see a little bit of a pullback here, especially given the speed of the move up and the fact that all of the major indexes are sitting on the top of their Bollinger Bands. So that's often a place where trends at least pause and sometimes get a correction back down. All right, so let's take a look at IWM. IWM, looking a little bit cleaner, easier to interpret. We've got those moves down into November 17th, again, similar to Apple. So there's some good alignment there. What about the dollar? So the dollar really got crushed last week after the CPI news. But we are seeing a potential for a move up here next week, coming into with some pivot high probabilities as well. So this is always nice to see that combination of moves up into a pivot high and then followed by probabilities of a move down. Okay, so the dollar, it looks like it has a pretty good potential to recover after getting smashed last week. Who knows where it's going to recover to? I would suggest that at least this magic level is a good target for the dollar at 109. All right. So let's go back to TradingView and let's update our forecast based on what we just saw. All right, so we're going to do this on the Qs as usual. So we've got this we've got this forecast that we built last week, and we've got this giant pump here that we had on Thursday, Friday. So based on what we just saw and combining the data points like the potential for the increase in the dollar and the Apple forecast and the IWM forecast and the price factors, considering that we're up here near the square of 12, we're close to major retracements like the 50% retracement. We may get a little bit of continued follow through up here, but I really think that whatever follow through is going to be capped by these major resistance areas. So the forecast for next week, at least in the shorter term, is I believe it's going to look something like this, starting from the Gann wave yellow on Monday. And we can see that based on the probabilities and based on the price resistance, I think there's a good chance that we see a pullback at least for a week. Now, I'm going to leave this green target area and other yellow forecast arrow on the page here, because I do believe once this correction of the broader structure since August 16th is over, I think we still will end up somewhere down here in this white magic level, just given the overall macro environment and the steady reduction in liquidity that we're seeing, and the fact that, you know, in general, in a bear market, surprises are going to be to the downside. All right, so that's our forecast for the coming week. We anticipate a good risk reward bearish trade here coming down, but it may not resume the broader bear market yet. All right, one other thing I want to show you guys that I picked up from the price action last week in Apple is what happens when the Chaikin money flow spikes. So if we look here on Friday, we can see there's a big spike in Chaikin money flow up to the 0.55 level. So what happens when it spikes up that high? I was really curious about this. So I went and did a little bit of a study here and looked back at previous examples where the Chaikin money flow spiked that high, and what did we find? So if we turn on CMF peaks here, then we can see that quite easily. So what I did is I went through and identified all the peaks in the recent past where Chaikin money flow exceeded 0.4. And this is a lot easier to see on the daily. So if we zoom out, then we can see here the green bars indicate where CMF exceeds 0.4. And most of the time, these correlate at or near peaks. There's a couple of examples where the Chaikin money flow on the 30-minute making a spike above 0.4 correlates with the start of a bullish move, like here. And we can, however, most of the time it does tend to correlate within a few bars of a high, right? Here's another start of the move, here's a high. So the question we need to really answer here is this the start of a move over here? Or is this going to turn around and be corrected in the next few days? I would argue it's closer, it's more of the end of the move. It's not, I don't believe it's the start of a move here. And part of the reason why is the fact that the Chaikin, the fact that price is up here at the top of the Bollinger Band. It's very rare to see a move up to the top of a Bollinger Band continue up. There's one example here back on March 18th, where price spiked up to the red, the upper Bollinger Band, and it just rode that Bollinger Band all the way up. Is it possible that that happens here? Yes, absolutely, that's possible, but it's unlikely in my opinion. I think what's more likely is we get a bit of a reaction, which is what the majority of these green bars are telling us. They're saying that when these CMF spikes occur, there's usually a reaction within a few days. It may still evolve into a bit of an uptrend, but I'm expecting the primary trend for this week to transition to a bearish trend as we sort of digest this huge move on Thursday, Friday. Okay, so let's go and take a look at some of the other major stocks. We've taken a look at Apple. Let's take a look at Microsoft. So Microsoft is showing increasing down pressure through early December. Now, one of the things I don't like about this forecast is this broad cluster of pivot lows. It's not really, converging on some clear calendar days or specific calendar days. I'm not a fan of this kind of behavior from the machine learning, so I'm sort of discounting that. But we do see a pretty clear increase in down pressure here. Also notable is the lack of green. We don't see any up pressure until really March. Okay, so that's Microsoft. Let's take a look at Google. Google also shows a big cluster of down pressure here in mid-November, complemented by some pivot lows. And those are peaking November 17th and November 23rd. All right. Let's take a look at Bitcoin now. All right, Bitcoin. Wow, I don't know what to say about Bitcoin, to be honest. What a week with everything that's happened at FTX. Obviously heartbroken for any of you that were unfortunate enough to have money there. I really hope it's manageable. And this could turn into, in the next few weeks, the buying opportunity that we've been looking for. I think right now at about 17,000, 16,000, we're within $3,000 or $4,000 of Saylor and MicroStrategy getting liquidated. From what I've seen in some tweets, who knows if that's true. It probably won't be as black and white as Joe Retailer getting liquidated, but that being said, if that comes to pass, we could, of course, very easily see 4-digit Bitcoin sometime later this year. And who knows, maybe it aligns with this cluster of red over here in December. But there's just a massive amount of liquidity being drained from the crypto ecosystem right now. There's no confidence in it anymore. And of course, if Saylor supply ends up getting liquidated, then that's just going to push price down even more. All right, so that being said, definitely want to keep your powder dry on the crypto side. It looks like there's some great opportunities around the corner here, and it's unlikely that this is the low here on November 9th at 15,877. I think we're going to be seeing some lower lows here, and that would be the opportunity to maybe start to nibble on some longs. And we're still showing some patches of green over here in later December. What about Ethereum? What are we seeing here? All right, so Ethereum still has, more down pressure than up pressure. There's not a lot of clarity, to be honest, in the timing forecast. So you definitely want to use traditional price analysis techniques, and pay close attention to volume and magic levels here. You can see how important this magic level at 1364 is, as price sort of gathered below it for a period of weeks, pushed up, sold off hard. But overall, it's given everything that's happening in crypto, Ethereum showing some stability here. We've got a pivot low November 14th. we may see a bit of a move up here into this reduction of down pressure early next week. Okay, and to close the call, I want to leave us with Litecoin here, and I want to show an enhancement made to time trades this week using Litecoin. So I've improved the info dialog here. You click on the eye, and up pops more information about the symbol than before. We are showing now the date range for data that's on the chart, the date range for data that's used to train the model, the date that the model was last trained on, the 2 standard deviation and 1 standard deviation levels that are used. And this bottom section here is new that shows some precision statistics. Now, precision is the percentage of forecasts that are correct. And this is calculated basically by back testing the system. It's part of the machine learning process, a process called cross-validation. We can collect some statistics on how well the model performs. And these are shown here. These statistics were generated just yesterday. And it shows the percent precision or number of percentage of correct forecasts for pivot highs, moves down, moves up, and pivot lows. And you can see how moves down and moves up are more accurate than the pivot. So that's something to keep in mind. You can use that to help inform your decisions about how much weight to place on these forecasts when you make your own trading decisions. Okay, so that wraps it up for today. Thank you for joining me again this week. Good luck trading this week. Trade safe, and we'll see you again next week. Bye now.